Hello, everyone. Thank you so very much for joining us today as we review the latest November Spectrum Investor Confidences data. It's December 4th, 2018. My name is Randy Wostrowski, a director here at the Spectrum Group, joined by Kent McDill, our senior writer. Kent is going to kick things off by reviewing the investor indices highlights from the month of November. After that, I'm going to talk about some of the key findings from our recently published annual personal trust update report, which will be accompanied by a few data points from our soon-to-be released 25 million plus investor report. Again, it is December 4th today as we're recording. We do hope to have that 25 million plus report finished up by the end of the week. And at the duration, I'll give everyone just a couple of high-level summary points relative to our 2019 Wealthy Investor Series and Spectrum's visual analytics. I'm going to turn it over to Kent right now to talk about the indices. Kent?
Thank you, Randy. In November, the Spectrum Millionaire Investor Confidence Index had an improved score, as you can see on the chart, despite several indications that those investors were actually backing away from stock market investments. The survey was conducted November 26th and 27th and was impacted by a loss of almost 1,000 points to the Dow Jones Industrial Average during Thanksgiving week, which was followed by a recovery of most of those points the following week. Trade relations with Mexico and Canada remained uncertain at that time, as did tariff conversations with China, causing the confusion that appears in some of the indices. The Spectrum Affluent Investor Confidence Index, which reflects the confidence of investors with 500,000 in investable assets, dropped from 3 to -1, marking the first time the SAICI has been below 0 since sitting at -3 in February of 2016. That's almost a 2-year period. However, the Spectrum Millionaire Investor Confidence Index, which reflects the confidence of investors with $1 million or more in investable assets, rose from 3 to 7, despite millionaires backing off of both stock and stock mutual fund investing in November. Those investors also backed away from the safer investment choices like individual bond mutual fund, and cash investing, which the SMICI interprets as a positive sign. The other indication that millionaires were a bit more optimistic in November was in the Spectrum Household Outlook, which measures the outlook of investors on 4 factors which impact their daily financial lives. Among millionaires, the outlook rose in November from a very low 13.67 in October to 18.1. The improved outlook, combined with the investment decisions of millionaires, created the positive gain in the Millionaire Confidence Index overall. The outlook among non-millionaires fell more than 12 points to 8.84, hitting single digits for the first time in 2018. As a result, the confidence index for affluent investors dipped into negative territory, as I said before. The overall outlook dipped to 13.8, as indicated in the chart, which shows a drop in outlook among all 4 components. Note that the outlook for the economy overall fell into negative territory for the second month in a row. Back to the investment decisions in November, only 30.6% of millionaires said they were going to add to their individual stock investing in the coming month, and that's the lowest percentage of our participation in that category since June. Among non-millionaires, stock investing fell to 19%, which is only the second time this year that interest in individual stocks fell below 20% in that audience. Even stock mutual fund investing fell among millionaires from 41.4% to 35.1%, and among non-millionaires, stock mutual fund investing was halved from 34.4% to 17.2%. Another example of the cautious nature of investors in November was in the category of not investing, which is those investors who are not going to extend their investments at all in the coming month. Among non-millionaires, the percentage reached 55.2%. The first time more than half of investors backed away from further investing since July of 2017, and among millionaires it reached 36.6%, the highest level since June of 2017. Every month we ask one question about current events, and in November we asked investors, what story in the news is most affecting your economic outlook? The most popular answer was international problems, which garnered 29% of the respondents' choices, but the answer gaining the most ground from 3 months prior, when the question was last asked, was stock market conditions, which got the nod from 17% of investors. What's interesting is that there are several categories of responses that's ahead of the economy, which we're always told is the most important thing to everybody. I will now turn over the conversation back to Randy, who will discuss key findings from our new bank trust update.
And thank you so much, Kent. I certainly appreciate it. As previously mentioned, this is an annual report that we publish on the state of the personal trust indice. The primary source for the data used in our analysis originates from FDIC surveys of member trust institutions. All institutions that have any fiduciary related assets file this information annually each December. The universe of institutions reporting primarily does consist of nationally chartered and FDIC-insured state-chartered institutions. But starting first with a little bit of feedback from our soon-to-be-published 25 million plus report on their ownership. As you can see, over 90% currently have some of their assets held in the structure of a trust. But what's truly significant here is looking towards the bottom of the screen, you can see there almost 1/3 of respondents who have a trust say they have either 4 or 5 different trusts. That really is a significant differentiator among this 25 million plus investor group and truly showcases how different their needs are relative to the specific products they use to protect their assets. Also from the 25 million plus investor report, we ask about who actually acts as the trustee for the various trusts, with the number 1 being spouse, number 2 child, and then you see they're coming in third, 21% identify as self-trustee. Going on to the right side of this chart here, talking about who will act as the trustee upon the death of the benefactor, then you're looking at all 3 of the top are some sort of family member with spouse, child, or other family member, and not even getting into an attorney or financial institution until after that. That's a trend that we have been seeing fairly consistently over the years. We're looking at the 8th year in a row that the number of personal trust accounts within these U.S. institutions that, again, are primarily consisting of nationally chartered and FDIC-insured FDIC-insured state-chartered trust institutions, just over 550,000. That, again, has been in a steady decline since 2009. This is something that we can certainly attribute to certain types of technology enhancements and efficiencies that have been brought into the market. But at the end of the day, you cannot ignore the downward trend that we're seeing here. And one of the many reasons why, when you're talking about the whole concept of the ownership of trusts that we see in some of our data, is the lack of knowledge. So we ask questions about what do you consider your knowledge level about the benefits of trust accounts to be, from a scale of 0, not at all knowledgeable, to 100, very knowledgeable. And among the wide breadth of wealthy investors that we survey, the response to that question was just under 50. So literally leaning more towards not at all knowledgeable relative to the benefits of trust accounts. And that kind of speaks to what advisors and financial providers need to do from a communication standpoint relative to the benefits that wealthy investors can accrue by utilizing various trust products. This actually kind of breaks down looking at the managed personal trust versus non-managed personal trust. Again, adding those two together puts us at the total of this 556,142 number. But again, seeing declines in both the managed personal trust accounts and non-managed personal trust accounts. One thing that we consistently see is the dominance of the top 10 firms from a concentration standpoint of asset share. That's something that, as you can see, did not even change at all year over year at 57.7% relative to that concentration level. And it's something that will continue to stay the same unless we see a significant shift in consumer appetite relative to working with smaller banking organizations, that the top 10 firms will continue to hold a majority of the asset share when it comes to personal trust providing. Looking at where some of the investments are made, specifically from common and collective trust funds, you can see that certainly a absolutely dominant performance by domestic equity, or I should say dominant allocation share by domestic equity, followed up by a significant decline, but still the second most being in the equity space with the international and global. And then looking at blended accounts there at 10%, taxable bonds at 10%, and then always wanting to have a little bit of your short-term investments there, which you can see at 11%. Going into 2019, you can see on the right-hand side of our screen here the various topics that we'll be publishing in our Wealthy Investor series. These are not only research reports that you can subscribe to on an individual basis and just gain access to the report itself, but all of this research is supplemented by our visual analytics technology, which allows you to use various filters to look at some of our data, to do your own analysis and to really hone in on specific demographics you may be trying to market to, develop products for, and things like that here as we head into 2019. If you do have any questions about that, please feel free to reach out to me, Randy Wostrowski, and I would be happy to set up some time for us to discuss the Wealthy Investor series. Also, always happy to chat about everything that we're doing here at Spectrem, talk about the results from the indices, from our recently republished reports, or anything else that I can do or Spectrem can do to be of service. Please don't hesitate to reach out. Once again, thank you so very much for joining us. Please tune in next month. Thank you.